Did you know that buying certain properties in Surrey BC could either leave you without financing or even force you to move out of the actual place you bought, only giving you a minimum of $20,000 compensation in return? Imagine thinking you found your dream home only to realize that it is a complete financial trap. These risks are catching homeowners off guard, and what seemed like an incredible purchase at the time are turning out to be incredibly costly mistakes. In today's video, I'm going to show you the 5 worst properties that you could consider buying in Surrey, BC. I'm going to let you know what the problems are and why they are stinging so many home buyers just like you. So if you want to learn about how to avoid these massive financial pitfalls, stick around because we're going to get into it right now. You only get one chance to buy or sell your next home. Let's get it right. Selling properties in the area since 2007, I have seen it all, but there are 5 types of properties that we recommend to our home buyers to avoid at all costs. Now, obviously it's not always feasible. Everybody's got a budget and everybody needs somewhere to live, but these are warning flags that I want to give to you right now so you can avoid these as best as possible and help avoid what problems that so many incur when they own these types of properties. The very first one on our list is a type of property that always looks like it is a massive deal. In fact, it makes the phone ring all of the time by excited home buyers because they think it is a huge deal, but there's many more problems lying under the surface. And the first type of property we're talking about is leasehold properties. I want you to picture this. You find a beautiful house in Surrey that's listed at half of the price of similar homes in the area. It's got a great location, nice finishes, looks like the deal of a lifetime. But then you see the word leasehold in the listing, and that's where the trouble starts. So what is a leasehold exactly? Well, a leasehold is where you really own the rights to occupy the property and not the land. This means in certain cases, there can be a majority shareholder or majority owner, and they own other units in this complex. Now, not every leasehold works like this, but one that comes to mind is a property called Sun Creek in Surrey, which is the receiver of so many of these buyer inquiries. Now, there is a majority shareholder in Sun Creek, and that majority shareholder, without naming them, they own a large portion of the properties in this development, meaning they can really make decisions about what happens to the development against all of the other owners because they have a majority vote. And of course, no vote means no negotiation or no input from the other owners. This means if they decide that the neighborhood needs upgrades, you're paying your share whether you agree or not. This particular complex, these homes, well, they're nice in size, but a 1,400 square foot home. These are built in 1972. Owners there pay over $800 a month in fees, somewhat similar to Strata fees, which can at times be even more than their mortgage payments. Even worse yet, they have been upgrading this complex over the last few years and sinking massive amounts of money to try and turn a 1970s build into something a little more modern, and it is required. But this means that the owners, the ones that aren't part of the majority shareholder, they're getting stuck with massive bills that are getting put onto this complex that have been accelerated and put in place to bring it up to a more modern state. And this has resulted in tens of thousands of dollars of levies over the last few years. And as you can imagine, this has pushed many people to either have to sell their properties or it's put them into financial ruin. And if you're thinking, well, they could just sell their properties. They could sell their properties and maybe somebody wants to live in a more updated property. Well, not so fast, because leasehold properties come with a very difficult problem to solve, and that is the fact that most banks don't even want to finance them. You not only oftentimes have to have at least 20% down payment to buy into these places, but many of the banks, they just don't simply want them on their portfolios, meaning you have very limited lending options, if any at all, making them much harder to sell to a much more limited crowd. It's easy to be tempted by low price tags by properties just like these, but the long-term costs are staggering. The affordable home that comes with unpredictable fees and assessments that can bleed you dry. The next on our list is manufactured or mobile homes. Look, these aren't properties for everybody, but they do serve a certain set of the population that find them affordable and even enjoy living in these communities. But why do I say to avoid them? Well, there's a few reasons that you need to be ultra cautious for. Remember in our last example with leasehold properties, the banks, they don't like them. Well, the same can be said about manufactured homes. They are incredibly difficult to get lending on, and most major banks, they won't even touch them. One of the reasons for this is you're not really selling a home. You're selling something sitting on land that doesn't belong to you. It's a mobile home. It's kind of like a car. It's like a house on wheels. So naturally, the banks don't like that and they don't want to lend money on them. So when you're buying into one of these and you're trying to sell it to somebody, they can't get financing on it. So oftentimes you're looking at people who are using line of credits or maybe have the cash from a previous sale. But what happens, because as I mentioned, you're renting the land, what happens when that landowner sees dollar signs because they've been approached by a developer with this massive piece of property, this massive manufactured home park that is so attractive in today's world of build up to the sky? What happens when they sell that to a developer? If you're forced to move, you'd expect fair value for your home, right? That's not the case. The maximum payout is $20,000, no matter if your home is worth $150,000 or it's your only asset. So you might be thinking, okay, well, I could just pick up this home and move it to a different site. I will tell you from experience in dealing with these in previous years that finding open pads that are available for rent for manufactured homes is incredibly difficult, if not impossible. And oftentimes in the lower mainland, good luck, fat chance it's not happening. You've got to go to the interior of BC, and even doing that is still incredibly difficult. So, because you're effectively renting the right or the pad rental when you have a manufactured home, but you own that, you have to get rid of it, move it somewhere else, and you've only got a fixed period of time to actually get it done. This is a massive problem that has stung many homeowners all across Surrey and also the lower mainland as of the recent years. The next one on our list is dear to my heart because this is one that I run into so frequently, helping people just like you buy and sell homes all over Surrey each and every day. Worth mentioning as well that if you are considering buying a home this year and you're not quite ready to talk to a real estate professional like the German group, well, there is a PDF available for download in the description below where you can get access to the available grants, rebates, and incentives available right now for homeowners and home buyers that will help save you a ton of money and avoid giving away some of that hard-earned work cash to the government when you really don't need to. So it's in the description below if you want it. The next on our list is near and dear to my heart because I run into this all the time helping people buy and sell properties in Surrey. And one of the reasons this particular one comes to mind is because it's so attractive to people looking to buy real estate. You know, real estate's incredibly expensive in Surrey and in the lower mainland, all over the place. So it makes sense that oftentimes having rental income would be a really great thing. But many times there's homes out there that offer multiple rental suites. And, you know, you might be thinking, well, look, there's multiple suites, multiple streams of income. This is a very good thing. But the challenge is those homes with multiple suites, they're not supposed to have them unless they were actually built to have them, designed to have them. The BC building code allows them to have them. The zoning allows them to have them. Then that means they're not supposed to be there. They're unauthorized, they're illegal, and they can get shut down by the city. Now you might be wondering, well, Darren, there was some really big changes by the BC government back in 2024. It was called the Small Scale Multi-Unit Housing Initiative, which allowed to have suites in properties and allowed to put multiple units on a property. Everything really changed. And if you're unfamiliar with what I'm talking about, I will link that video down below in the description. It's a really good one. But what I want to make sure you understand is it's all about safety. And here is the crux of everything. The BC building code only allows for one secondary suite per home. So as an example, you've got a standalone single family property, one secondary suite. Now, you could have a coach house as an example as well, but the coach house, well, that's known as an accessory building. It's not a secondary suite. So a detached home with two secondary suites, like two basement suites, that is simply not allowed by the BC building code because it is a safety issue. Now, there's lots of these types of homes that exist out there, but as our communities grow and as it becomes more difficult to find parking and as your neighbors get potentially annoyed with cars all over the street and people coming and going from your property, if that home that you buy with multiple suites, one of them or all of them unauthorized, and they reach out to the city and say there's something going on here that's an infraction likely of the bylaws, the city comes and investigates, well, they shut you down. That means you are out that rental income. That means that you potentially have to decommission your suite, also costing you money. And if you were relying on that suite income to carry your mortgage, well, you're going to be in a little bit of trouble. So for that reason alone, we recommend that when you're dealing with homes with unauthorized suites or suites that simply aren't allowed due to the BC building code, you really tread with caution. Coming up next is homes that are in a flood zone. This is a big and sensitive topic for the people of British Columbia, but it is an important one, especially as we progress to things coming up in the future that you're going to want to be aware of. So, why is living in a floodplain a problem? Well, obviously, insurance, whether it's wildfires or natural disasters or floods or whatever it may be, have been a massive topic over the last few years, and it's likely only going to get worse. Now, one of the things that we're prone to in British Columbia is flooding, just because we have all these beautiful rivers everywhere, especially in the lower mainland. In fact, if you're watching this video, you probably remember the massive flood that we had in Abbotsford just a few years ago that completely destroyed the community. Well, what would happen to some of these properties that are located in floodplains? Let's think areas of Cloverdale, Pitt Meadows, Maple Ridge, Richmond, and Surrey as an example. These communities all have areas that are located in floodplains. Well, you may or may not know this, but the floodplain maps right now currently are being redrawn. And I want you to imagine what happens to a property when it once was not located in a floodplain and afterwards is found to be located in a floodplain. How might buyers react to that property, and what might that do to its resale value? Maybe you already live in a flood zone and you knew about that going in, but as these floods tend to become more common, you've got to think about what may happen to your resale value. There's a whole other conversation about that as well, because the fact of the matter is, what happens if insurance companies decide that they no longer want to provide insurance for high risk properties that may be very prone to being in a fire area, like a forest or in the interior, anything like that, or properties that are in flood zones? That could be a big problem. Here's where it gets even worse. If you can't get insurance on that property, then therefore you might also get your mortgage recalled. Therefore, you've got very little value in terms of who wants to buy it, what they're willing to pay for it. It can't be insured and you can't get a mortgage on it. You are in a very, very difficult position. So be very wary of buying properties that are located in floodplains. The fifth on our list is an interesting one, and this was one that it's going to affect many, many people in the lower mainland, and they're not going to love that I'm saying this, but that is high rise, think concrete tower, strata condo buildings. So why do I say this? Well, I want to take you into a little bit of a time machine right now, where back in 2020, just before the world seemingly shut down due to the COVID-19 pandemic, there was another issue going on in British Columbia that was absolutely massive, and it was related to strata insurance. So what happened? Well, the big insurers around the world finally made a decision that strata properties were just so expensive to repair, to fix, especially as many of them began to age all over the world, that the risk versus reward of insuring these properties wasn't adding up. So what did they do? They absolutely ratcheted and cranked up the insurance premiums to make sure that they were better covered. So what did that mean for the average person? Well, the average person living in a strata building, some saw that their insurance policy deductibles went up almost 800%. So a building as a whole, as an example, let's say that they were paying, let's say, I don't know, $10,000 for an insurance deductible each year, and that number just absolutely skyrocketed, meaning that their strata fees all went through the roof. This is why you're going to notice with these high-rise concrete buildings that their strata fees often are so high, because back years ago, we used to see deductibles for the average homeowner, as an example, if there was water damage or water escape from their unit. The water deductibles, they might have been 5,000, 10,000, 15, maybe as high as 25,000 back in the day. Fast forward to today, where those deductibles are usually ranging anywhere from about $50,000 to start, but more often than not, 100,000, 150, 250, or as high as $500,000. I want you to think of the impact of that if you were to experience water loss, if you lived in a condo building, what that might do. You're up at the 31st floor and the water goes down, 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 and ruins a bunch of other units. And, the deductible is, or the damage rather is 450,000, but your deductible is 500. Holy smokes, right? That could financially destroy somebody. Insurers are now assessing buildings individually, and older towers or those with past claims face the steepest premiums. Even newer buildings, in fact, aren't safe. Construction defects often surface years later. There was one luxury Vancouver tower that had to replace all of its windows within the first 10 years, a $20 million bill that was split amongst the owners. As you would imagine, too, when strata fees get higher and higher and higher, they create a little bit of a domino effect because then people simply can't afford their units and they need to sell them. So then you end up with a building with a ton of units for sale, really high strata fees, and really no way out of them. Some of these concrete towers in downtown Surrey and other areas of the lower mainland are absolute ticking time bombs. So you could simply consider to stay away from them as best as possible, or at least go after the more reliable, low rise wood frame buildings that are between 4 to 6 stories. So I just shared with you the 5 most concerning types of property in Surrey. And this isn't just limited to Surrey. This is all of the lower mainland. These are properties that if you have the ability to avoid them, you want to do so at all costs. And let me offer another thought as well, is that working with local representation, it's a thing. It's a big deal. As an example, parts of the interior may be prone to forest fires, or they may have different things going on in that community, whether it's water quality or the ability to fight fires or general insurance issues related to natural disasters or the potential of them that realtors from outside of the area just simply may not know. So, whenever you're buying a home, local representation is always important. And you're going to want to interview maybe 1, 2, 3 realtors in that local area to make sure that you're getting the representation you need and that you're feeling comfortable, that you're going to be protected and have all of those concerns dealt with. You don't want to buy any of these properties without knowing the pitfalls, the concerns, and what could get you down the road. And it's really your job to get as informed as possible before you make that decision. Now, hey, I mentioned something towards the middle of the video, and that was about some really big zoning changes. That video is going to be in the description down below. But in fact, the video coming up next is even more impactful because we did talk about floodplains, and I want to make sure that you are as informed about floodplains as possible. So we're going to do a deep dive on the risks associated, what's going on, what the problem is, and what the solutions might be in the video coming up next. So I'll see you over there right now. This home behind me is worth more than most people will make in their entire lifetime. And that's because I'm standing in front of the most expensive home in all of White Rock and South Surrey. But here's the thing, it's not even in the most exclusive part of town.